This is our blog video for May 23rd, 2013, and these are our currency indexes. And basically it's a chart view of each currency. This is the dollar. We compare all the dollar pairs together and give you a wealth of information in a very small, easy to read window. Basically what this does is it lets you see the hourly moving average in gray, 15-minute moving average in green, previous day's high in dotted green, previous day's low in dotted red. Obviously a currency that goes underneath yesterday's low, in other words becomes weaker than it was all day yesterday, is a very significant thing and tends to go down. We also have our containment bands on each individual currency, and especially when it hits the white 2.0 band, it tends to reverse. As you can see, it went a little bit underneath there, reversed, hit it, reversed, hit the high, reversed. You can see the New Zealand, same thing, reversed, went a little bit above it, reversed. So you can trade with the trend, and then most of the time you can expect reversals when it's underneath the lower band, and especially when it's underneath the lower band and maybe it hits the fib target, which you can see the 1.382 is right here. The point of control of the previous day, in other words, the price most actively traded in all the dollar pairs yesterday is right here. It's going to be very key support, especially underneath the lower band. And at 640 or so, you know, probably 90% chance that the dollar is going to go up. So you can exit your maybe euro dollar longs or dollar Swiss shorts and flip and go the other way. So you want to use this to basically find the strongest currencies and buy it versus a weak, and sell the weakest ones versus the strong, and vice versa. It's that simple. Most people trade the euro, pound, dollar, and yen pairs. So we'll look at it in terms of this. Starting earlier in the day, you want to basically see is the currency above or below its hourly. If it's underneath its hourly, it's more likely to go down. Is it above or below the point of control, which is the price most actively traded? In this case, they both happen to be at the same. Here on the dollar, the hourly moving average is here, and the point of control for this currency is way down here. So when it's in between both of them, obviously you want to use the hourly as the filter. You know, if it comes down to this level, you can certainly look to consider buying it the first and second time. The third time, anytime support resistance gets hit 3 times, the third time is much more likely to go through. So basically, as you look at these currencies, the yen really is the only one that starts the day off above its hourly and probably above its point of control. The daily trend's up, the weekly trend's up, the monthly trend's down. Monthly trend has very little impact on today. I prefer the real-time trend, the daily, and mostly the weekly. And anytime you see our FX trend intensity hit plus 80, that is a trend that's very likely to go up. And most of the time you do not want to buy a currency above the white 2.0 band, but if it has this kind of intensity, it certainly can go up. And so you can see this went up, kind of pulled back a little bit, went sideways, broke out again. You'd go long with your stop, you know, looking at this. You can look at 2 currency indexes. Let's say you're short the pound yen, because the pound's, you know, kind of breaking down right here, especially at 2. It went underneath last week's most actively traded price. It's underneath its hourly, wasn't able to even touch, let alone go through the previous day's high. And so the price was up near the highs. And so, you know, it has a good distance to fall. The lower containment band, previous day's low, are all potential profit targets. And, you know, the yen of these 4 is clearly the strongest. The dollar's trending down, the euro's underneath its hourly. So there's not much choice with these 4 pairs. You want to, especially when it breaks down right here at 2, you want to sell the pound yen. So that's now, sometimes the currencies are kind of drifting in a direction and have already gone a good distance before the currency indexes move. You can see this particular currency kind of has been trending down. It found the lower 2.0 band, which I said most times underneath the 2.0 band you're going to get a reversal. So you do have to be very careful in selling underneath it. Usually I will, you know, get short here and maybe consider one more pullback, whether it's shallow or deeper. And when it's underneath the 2.0 band, it almost always reverses at the first or second fib target. So you really don't have much choice. It comes down. If it's stalled right here, I'd get out of the whole thing. And typically, if it goes to 1.618, I get out of the trade. And because It is so far down. This is the area where I start to scale into big positions. And you can see it went up pretty quickly, about 50 or 60 pips. And there's clear divergence on our perfect oscillator as it double tops right here and has a little wedge pattern. This is a pretty high probability trade. And again, the place where it's likely to go and stop is the fib target of this last wave down, which I will draw on the chart right now. You can see very likely is the next area to stall. So you get out of your trade here because it didn't really explode through it like before, and as it goes down and comes back up here, this is where I'd exit the trade and flip and go long. When it kind of stalls right here, I'm going to get out of half, and then when it goes up and stalls the second time, out of the second half. So, you know, when currencies are underneath the lower band, perfect oscillator is at an extreme, which rarely happens. Very high probability place to get out. Now, I wouldn't push the luck here in selling it, but that trade did pan out. When the trend's down and you have plus 80 levels on the high end, it's typically a pretty decent place to look for sells, as you can see. You know, this one fell, it kind of went sideways and then dropped. This one here did well. This one here, the market went sideways and then dropped 40, 50 pips. This one right here dropped 20 pips. And you can see it made a slightly higher high with divergence again. So this trade right here is very high probability. And a lot of times the markets try to go higher, they fail. There's a nice little slightly lower double top right here. But once it can't break this low here, you know, it works its way back up. You can use all kinds of patterns to predict when prices are going to reverse. One is our trend channels. So you draw your channel up, when you project it off the highs. Now in this case it was kind of an explosive move. Let's do that again with, in some cases you don't get very good, whoops. Let me redraw this off the low here. There we go. From here, here, and here, you projected it to here, and a lot of times in the upper quarter quadrant is where the market reverses. And if you really want to wait for confirmation, you can wait for it to go down, tries to go up again, fails, breaks this swing low right here. Pretty high probability place to get out of a currency that's gone too far. And you can also do things like draw trend lines. And you can see the dollar, or the euro in this case, went down, found support at the previous day's low. It also probably hit the fib target off of this. Not quite. Didn't even make it to the fib target off of that. And a lot of times they, if you draw multiple swings on, this was the most recent one. I'll make that one a different color just so it pops out. You can see it hit the 1.38 previous day's low support right there. You can see the statistical intensity of that down move was incredible. Got less, got weak again, and you know you have clear divergence there, and a kind of a little mini double bottom. So it's a pretty high probability trendline break. Found support at the fib, previous day's low. 7 o'clock, it's likely to go up. And most of the time when currencies are done going up or down, they'll work their way back to the hourly. So you have a good deal of travel distance to trade here. No, so let me remove all these lines on here. At this time when it's likely to reverse, which currency maybe is likely to reverse from the upside down? Well, the yen's been pulling back, but it's already pulled back considerably. I would prefer this one had maybe worked its way back up here, and then you would basically buy the euro yen. The pound, you know, looks like it could be going up again, and it's not as weak as the euro was earlier. The dollar is extremely weak, but it's underneath its lower band, so you know it could clearly pop. So there's no, of these four, there's no super easy trades at 7 o'clock. Let's see what else we have here. Okay, the Australian. The daily trend's down, the weekly trend's down, and this thing's been going up a lot. So I would, you know, at 7 o'clock look for Euro Australian sales, because the Aussie's gone up statistically considerable amount. It's very likely to pull back, and the euro has a very clear reversal signal. So that's just off the first one I saw on here. The euro Aussie is very likely at 7 o'clock to go up. Like I said, the euro is very likely to go up. The Aussie is very likely to go down. Here's 7 o'clock. You look at it, it's underneath the lower band. It's underneath The perfect oscillator is at an extreme. It's kind of going sideways here with slightly higher highs, nice little wedge pattern, breakout. You had about 15 to 20 minutes to see this currency, wait for the price to prove it to you. I mean, if it goes sideways and down, you don't buy it. But if it breaks out, you get in. And this is a perfect example of why this currency index technology works, because you can anticipate very high probability future price moves. You buy here, your stop is underneath here, and like I said before, most of the currencies that are deep down underneath a lower band will work their way back up to the hourly, so this makes a good profit target. This, and it went farther than that, but this profit target is clearly, and I drew this bottom circle wrong, so I'll take that off there and do it again. You're going to buy pretty much the breakout right here, and your stop's going to be underneath these lows. This is your risk, and your profit target is from here to the hourly. And so it's 3.5, 4 times bigger. And in this case, it went up even more. And with a range chart, you probably would have gotten a little bit more out of this. Typically, the first time it stalls, I get out of half. And when it's having trouble making higher highs, I get out of second half, because you never, and sometimes I'm out and it explodes up 30 more pips without me. You can never pick the move perfectly, but it's a very high probability trade. Because the euro is very likely to reverse, and as was the Australian. And if you had a trend line on the Australian right here, you would have saw that a little bit after 7, it broke the trend line. So, like I said, trend lines, patterns, all these things are very high probability. And in fact, if you have a trend line on there, you can actually duplicate the trend line and project it off the high of it, which is right here. Notice how a little bit earlier at 640, it predicted pretty much the high, and it pulled back and went up and didn't break that. Even more reason. So the euro is likely to go up. The Swiss was a little bit topped out. So at 7 o'clock, you could also look for a euro-Swiss sell. This one's not quite as good, but we'll put this on there anyway. This will be the last example today. Euro-Swiss after 7, we're looking to buy. This one, obviously trended down way underneath the band, worked its way up, pulled back again. Perfect oscillator is underneath the -80 level. It's way underneath here. And at 7, it's not my favorite pattern because it's already been going up about 30 pips. I don't like to buy or chase currencies. But you do have kind of a mini wedge pattern right here. This trade right here, I probably wouldn't personally have taken it, but at 7 o'clock you knew this was likely to give you money to the upside, and it did. I'd be much more apt after it kind of worked its way up and had another decent pullback. It's right at the 2.0 band. You'd be shocked how many times the currencies that do go underneath their lower containment band once, when they get back into the normal range that most of the time they spend, the second time they come down to the 2.0 band, they almost always reverse, probably 85% or more. And this is underneath the 80 level. It's at an extreme. You get into that trade right there, and it hit this level and came back up. A lot of times on these type of trades, I buy the middle of the previous 5-minute bar if I'm using a range or a minute bar. And that way your risk is just super, super tight. Your loss, if you have one, is ridiculous. And like I said, most of these will work their way back up to the hourly. And this one didn't quite hit the hourly until later. I wouldn't have held on to it as it went sideways. But you can use that for estimating profits. And, it's the risk versus, the absolute tiniest risk imaginable, very high upside. It's just a phenomenal trade. And for those who are looking to trade this downtrend, one of the highest probability trades is a 2-wave pullback. Currencies that are super weak, and this one didn't quite make it. The first wave up, pulls back, second wave up. Typically between the first and second fib target's a great place to get in. One of the reasons we added some new fibs on here is because sometimes they're so weak they don't hit the fib target. And typically, this is an area where you can, look to sell. Somewhere I'll draw a little rectangle. Somewhere in this zone, you can look to sell. And you can, it's also a great place to get out if you had bought a counter trend trade there. So you're short again, and it pulls back. And again, this is a very high probability buy area. So you would exit this trend trade because the trend's down clearly. Get out, flip, and go long and ride it up. And so the more you learn, the more methods you learn from watching our other videos. The Forex blog video, I'm pretty much just focus on how to use the currency indexes. It's easy. If you trade the way I teach, I don't see how anybody can muff it up, screw it up, and you can learn our other methods for counter trend. We have a ton of different ways of trading. They're all statistical in nature, and they all produce tiny, tiny losses when wrong and much bigger wins when right. And that's the only secret to trading.